Imagine transforming a simple $1,000 into a life-changing fortune. Yes, you heard that right, it's not a pipe dream. It's a reality that countless individuals have experienced, and you can too. Now you might be thinking, $1,000? That's barely enough for a decent vacation, let alone an investment. But let's shake off that misconception right away. Though it may seem small in the grand scheme of things, $1,000 is more than enough to kickstart your journey to financial freedom. The trick lies not in the amount, but in the strategy. Enter the world of smart investing, a realm where financial acumen and patience can turn modest sums into impressive returns. It's all about understanding the power of compound interest, that beautiful phenomenon where your money works for you, multiplying like magic over time. So, the question is not how much you have, but what you do with what you have. Let's debunk the myths that prevent many from taking the first step towards wealth creation. First off, the idea that you need a large sum to start investing. This couldn't be further from the truth. The reality is, you can start with as little as a few dollars. Many investment platforms now offer fractional shares, allowing you to buy a piece of a company for less than the price of a cup of coffee. So the notion that you need thousands or even millions to get started in the stock market is simply not true. Next, we have the myth that investing is too risky. Sure, there's risk involved as with anything in life, but it's not akin to gambling, as some would have you believe. Investments are calculated decisions based on research and understanding. Furthermore, there are plenty of low-risk investment options available, such as bonds or index funds. It's all about finding the right balance of risk and return for you. Then there's the misconception that you're either too young or too old to start investing. Age is not a barrier to investing. In fact, the earlier you start, the more time you have to grow your wealth thanks to the magic of compound interest. And if you're worried about being too old, remember, it's never too late to start. Even at an older age, investing can provide an additional income stream during retirement. Finally, a common myth is that you need to be a financial whiz to invest. In the age of technology, you don't need an MBA to start investing. There are countless resources online that can help you understand the basics. Plus, robo-advisors can manage your investments based on your goals and risk tolerance. These myths have been officially debunked, and hopefully those misconceptions no longer stand between you and your financial future. Now that we've busted those myths, it's time to get down to business. What if I told you $1,000 could turn into $1 million? Welcome to the magic of compound interest. Now, you might be wondering, what is this sorcery called compound interest? Let's break it down. Compound interest is the interest you earn on both your original money and on the interest you continually pile up. It's like a snowball rolling down a hill, growing bigger and bigger as it collects more snow. Imagine you have $1,000 and you invest it at an interest rate of 5% per year. After 1 year, you would have earned $50 in interest, giving you a total of $1,050. Now here's where the magic happens. In the second year, you earn interest not just on your original $1,000, but also on the $50 you earned in the first year. So your interest for the second year would be $52.50, and your total would be $1,102.50. Now this might not seem like a big deal, but let's fast forward a few decades. If you were to leave that $1,000 invested at a 5% interest rate for 40 years, you would end up with over $7,000, and all you did was sit back and let your money work for you. Now turning $1,000 into $1 million might require a little more time and a better interest rate, or adding a little more to your investment regularly. But the principle remains the same. The more time your money has to grow, and the more you can add to it, the bigger your snowball becomes. The key here is patience and consistency. Compound interest is not a get-rich-quick scheme. It's a get-rich-slowly, but surely strategy. The longer you leave your money invested, the more time it has to grow. Patience, indeed, is a profitable virtue when it comes to compound interest. So you have your $1,000. Now, where to put it? That's the million-dollar question, isn't it? Let's dive in. One brilliant option is stocks. Stocks represent ownership in a company, and they can be a lucrative investment if the company does well. However, they also carry a higher risk than some other investment types. If the company doesn't perform well, you could lose your investment. Therefore, if you're considering stocks, make sure you do your research and perhaps consider blue-chip stocks. These are shares in large, well-established companies known for their reliability. Another option is bonds. When you buy a bond, you're essentially lending money to a company or a government. In return, they agree to give you interest on your loan and eventually pay you back the amount you lent them. Bonds are generally considered safer than stocks, but the returns can be lower. But what if you want to diversify your investment? That's where ETFs or exchange-traded funds come in. ETFs are a type of security that involves a collection of securities, such as stocks, that often tracks an underlying index. They're a great way to spread out your risk and can be bought and sold throughout the trading day, just like an individual stock. We also have mutual funds. These are investment vehicles that pool together money from many investors and use that money to buy a diversified portfolio of stocks, bonds, or other securities. Unlike ETFs, mutual funds are only traded once a day after the market closes. They can be a good option if you're looking for diversification and professional management of your investment. So, how do you choose? It all depends on your financial goals and your risk tolerance. If you're saving for a short-term goal, you might want to stick with safer investments like bonds. If you're saving for the long term, you might be able to handle the higher risk of stocks or ETFs. The key is to start small, but think big. Each investment option has its own set of pros and cons, but the most important thing is to start. Once you take that first step, you're on your way to changing your financial future. But remember, investing is not a get-rich-quick scheme. It's a long-term strategy that requires financial discipline. This isn't about making a quick buck. It's about creating a sustainable path towards financial security. Imagine financial discipline as the compass guiding your ship, your 𝗗𝗏 through the tumultuous sea of the market. It's about having the restraint to avoid unnecessary debt, the wisdom to live within your means, and the consistency to save regularly. These habits, when coupled with smart investing, can significantly boost your wealth over time. It's easy to be swayed by the latest trends or flashy purchases, but true financial discipline involves resisting these impulses. Instead, it's about making calculated decisions that will benefit your future self. Remember, Rome wasn't built in a day, and neither is financial freedom. It's a journey, and every journey begins with a single step. With discipline and patience, your $1,000 can indeed pave the way to your financial freedom. So, are you ready to take your $1,000 and change your life forever? It may sound like a daunting task, and I understand if you're feeling a bit overwhelmed. But remember, we've just spent the better part of 10 minutes exploring the potential power of your hard-earned cash. We've shattered common myths about investing, proving that you don't need a fortune to start. Every dollar counts, and your $1,000 is more than enough to kickstart your journey towards financial independence. We've also explored the magic of compound interest, showing you how your $1,000 could grow exponentially over time. It's not a get-rich-quick scheme, but a slow and steady method that has been proven to work time and time again. We've walked you through practical steps on how to invest your $1,000. We've discussed diversification, risk assessment, and the importance of doing your research before diving in. Remember, investing isn't a gamble, it's a calculated decision, and with the right knowledge, you're well equipped to make that decision. But perhaps the most important lesson we've covered today is the power of financial discipline. It's not just about making that initial investment, it's about consistently saving and investing, and resisting the temptation to splurge on the latest trends or instant gratification. It's about understanding the difference between wants and needs, and always prioritizing your financial future over immediate pleasures. Let's say you're armed with $1,000 and a wealth of knowledge. It's now up to you to take that first step towards financial freedom. Remember, every small step counts. Every dollar you invest now is a dollar that will work for you in the future. And remember, the journey of 1,000 miles begins with a single step, or in this case, a single grand. So, take that leap, invest that money, and watch as your financial future transforms before your eyes. It's your move. Make it count. Alright, let's quickly dive into some of the best ways to invest your $1,000, according to financial experts. 1. Pay down debt. If you're currently battling with high-interest debt, paying it off can be one of the best investments you can make. It's a guaranteed return, and it frees up more of your income for future investments. 2. Boost your emergency fund. An emergency fund acts as a safety net, protecting you from unexpected financial blows. If you don't have one, your $1,000 can be a great starting point. 3. Open a Roth IRA. A Roth individual retirement account allows your investments to grow tax-free. It's a powerful tool for long-term wealth building. 4. Contribute to your 401k. If your employer matches contributions, this is essentially free money. It's an opportunity to double your investment. 5. Open a brokerage account. This gives you the freedom to buy and sell stocks, bonds, and other investments at your leisure. 6. Invest in a low-cost index fund or ETF. These funds offer diversification and low fees, making them a solid choice for beginner investors. 7. Invest in real estate. Through real estate investment trusts or real estate crowdfunding, you can get a piece of the property market without needing millions in the bank. 8. Start a business. If you've been nurturing a great idea, your $1,000 could be the seed capital you need to get started. 9. Invest in yourself. This could mean taking a course, buying books, or attending workshops to increase your knowledge and skills. Remember, the best investment is the one that aligns with your financial goals and risk tolerance. So, choose wisely and remember that every investment is a step towards financial freedom. It's your move. Make it count. And that, dear viewers, wraps up today's guide on turning $1,000 into a life-changing fortune. We hope you found these investment strategies insightful and empowering. If you did, please don't forget to hit that like button. It helps us know you're enjoying the content and want more of it. And if you haven't done so already, subscribe to our channel for more financial advice and tips. We're committed to helping you build a secure and prosperous financial future. Remember, your financial future is in your hands. Make it count. Until next time, stay financially savvy.